Thanks for joining us today here on the back of the earnings. And it seems like the earnings picture for HPE is to a certain extent similar to the earnings picture for a lot of your peers. Supply exceeding demand. However, the bottom line for HPE does differ from some of your peers. Why?
Well, good morning. Thanks for having me. We had what I call a mixed quarter. On one hand, we had a very strong profitability, which is very different than our peers, I will say. But if you look at our profitability, we grew 200 basis points year over year. And that's the mix that we continue to drive as a part of our portfolio mix shift. But AI continued to be the key of the story, right? The center of the story. And through the five quarters since the cycle started, we booked $4 billion. But only we have been able so far to convert $1 billion. And the reality remained that a big chunk of that revenue is going also through what I call the AIR, which means you don't get the benefit in period revenue, but you get it over the longer period of time.
Right.
And then reality is also that we had the networking business a little bit softer than we wanted in the back half of the quarter, and that's having a short-term impact. But long-term, we have no concerns about our ability to compete in the networking, hybrid cloud, and AI space.
I am curious, though, about the AIR. Basically, we're talking about deferred revenue, orders that are there effectively that you still have to fill, orders that you've had trouble filling because you can't get either the GPUs or other components necessary to complete those orders. What is the lead time right now for your ability to acquire those GPUs? And more importantly, does that backlog, are there any sort of contractual outs for those customers if you don't meet a certain timetable?
Yeah. No, I will say that supply is start to improve. We already have a lot of supply, but it's being now held through either customer acceptances or customer readiness to accept these products because they need the space, the power, and the cooling. And in some cases, they are taking a little bit longer than we expected. And we're going to have a lot of revenue converted in the back half because of those two issues are going to be much better managed, I will say. Lead times continue to be long. I mean, in the 20-plus weeks. So this is the reality we're dealing with. And we are setting expectation up front with customers that obviously is going to take that long time to get it. But the demand continues to be very strong. The pipeline is very strong. We see now demand in the enterprise space, in the inferencing side. And this is one of the benefits remain with the as-a-service model because these systems are very expensive, need a lot of power. Most of the times they don't have neither the power, the cooling, the space. And honestly, they don't want to outlay that massive amount of CapEx up front. So that's why our HPE GreenLake value proposition is going to help us going forward. And that also will smooth the revenue linearity of these systems.
So that recovery in terms of lead time, does that wind up explaining why your back half of this year outlook looks a little bit better? You cut your full year guidance, but it does still look a little bit backloaded. Is that why?
Part of Alex, and also part because we also have a lot of systems now being installed. That takes another couple of quarters to get the acceptances. Remember that these systems, we recognize revenue at the time of acceptance, not at the type of shipment. And so you have a combination of better supply and a significant number of acceptances that will materialize in the back half.
Well, what I don't understand, maybe you can help me clarify, is that Dell seems to be doing pretty well. So I'm just wondering what the difference is between you and Dell. Is it the GPUs? Like, where is it trickier for you?
I don't think there is much difference, to be honest with you.
But the investors think so because the stocks are reacting differently.
Yeah, well, I think the networking softness is actually affecting us. Dell doesn't have a networking business at all. And remember that we deliver amazing growth in the last 2 years, and now you're going a little bit of a slowdown. Yeah. But when it comes to the AI, we booked $4 billion of cumulative orders, and we have grown equal or maybe even in some cases better than Dell. But our backlog sits at $3 billion. As I looked at yesterday, Dell has $2.9 billion. And the difference for us is going to be a favor for us as we go forward because we have deep expertise in data center services. Dell does not have that. We have 2 data centers that now are up and operational to provide GPU as a service to customers. That would be a benefit. Third is we have a networking business to scale systems that they don't have either, particularly with HP Slingshot. And fourth is HPE GreenLake. And GreenLake will give customers the ability to access this technology without paying CapEx. Today, Alex, the vast majority of the action we have seen has been in model builders. And those are, our customers, they just outlay a lot of capital. And then, they just need GPU as a bare metal.
Fair enough, Antonio. I do want to talk a little bit more about the networking side of the business. A lot of analysts raised concerns on the call about the acquisition of Juniper Networks, a pending acquisition, I should say, and whether that pending acquisition did maybe cause a little bit of a chill for customers adopting new orders in the quarter.
Well, I can tell you, Romain, undeniably that there was no slowdown because of the acquisition. We have not lost one single deal. And what I will tell you, the customers now are very excited. And I just came from Mobile World Congress. As you know, that's a massive event for the communications business. And every single customer and partner we talk to, they're very excited about this combination. Because through this AI inflection point, you're going to need more network ports, not less ports. And the ability to really bring together the AI native world and the cloud native world is where customers are going to struggle. And as you think about the combination, HPE will double the size of the networking business. At the core, HPE will be a networking company that will provide hybrid cloud and AI services. From a shareholder perspective, this is amazingly accretive day one. And we have a path to create more synergies as we go forward. So I am actually super excited about this, and I can't wait to get this closed.
There's also, with regards to those synergies, Antonio, as you know, there's still also a lot of overlap between Juniper's business and your own networking business that you have on the books right now. How do you make sure that once that deal is complete, the cost structure is going to be favorable?
I actually contest that statement, Romain. There is not a lot of overlap. Let me give you a simple answer about that. We have three segments of the market: the cloud market, the service provider market, the enterprise market inside the networking business. The service provider and cloud market, we have zero overlap. We are not in that space. On the enterprise market, we have zero overlap in the data center space because we have been a campus and branch company. And in the data center, we're going to drive the convergence of our AI interconnect fabric, which we call HPE Slingshot. It's an Ethernet-based fabric that supports all accelerators, including NVIDIA, AMD, and Intel. And then we're going to drive that convergence with Juniper data center business with an AI-driven experience that will benefit us to reduce CapEx and OpEx for customers, and then converge that AI native and cloud native world. On the campus and branch, you will see that we're going to integrate the Mist AI-driven technology with Aruba Central. By the way, Aruba Central has now 30,000 customers on the platform. And ultimately, underneath that is the Aruba infrastructure of product services, where we have the IP and silicon software and services. So the overlap is extremely minimal. But obviously, customers want to see what the roadmap is going forward.